Greetings, land of YouTube. The question of the day is Bitcoin going to go to 40,000 or 20,000 first? 20,000 or 40,000? So as you can see, the 200-day moving average is currently below 40,000. Is it below 40,000 now? Currently at 39,890, and it's coming down. So one thing I can notice right here, this is not a healthy market by any means. This market's losing money. This is not any kind of accumulation through here, regardless of what anyone wants to keep trying to tell you. That's the 200-day moving average. It's going down, and that's not good. That is money leaving the market, right? No one can argue against that. It's not accumulation. But with that being said, let's just kind of zoom out here and look at since the year 2017, back here on the left. This is the last bull run here, out of the last halving. That actually looks pretty similar. If you look at that, see that? If you compare it to this year, that's pretty similar compared to the 200-day. See how that's working? Back here was actually a blow-off top. It only lasted a few weeks. So the tops were totally different. This year's bull run, this halving's bull run, caught a lot of people off guard because everyone was basically on YouTube was looking for the blow off top. But this market has obviously become more mature. And back over here further to the left, you would find the 2013 bull run. I don't think that's worth talking about. There's a lot more money in this now, and basically back in the 2013 is like a caterpillar. And it's kind of in this metamorphosis stage, Bitcoin is, right? Now it's kind of more of a moth or a butterfly, right? It's starting to, or at least in its cocoon, right? We didn't have that. We had a drawn out, February to May top, right? So that's a first. I think that caught a lot of people off guard. Everyone's waiting for the blow off top, right? And it just kind of corrected, and then finally Elon Musk pushed us down. But looking at this 200-day moving average, what do you notice different? See this sharp, let me get this lines out of here. See this sharp turn down? I don't find that anywhere else except for now. Last bull run, it's more of just a smooth, gradual decline over the course of a couple of years. This is all to scale, right? If I zoom in, you can kind of compare it to November 2018. Now, I didn't get into these money markets until like February, March of 2019, but I can say, looking at the macro charts of a lot of different entities, that something happened here in December of 2018. I don't know what it was. I wasn't paying attention back then. It's out of my data in my mind. I'm not sure what it was. I suppose I could look it up, but that's the only time I can see where it drastically curved down. And this, interesting enough, lost about 50% of its value from 6,400 down to 3,200. Almost 50%, almost exactly what we're dealing with right now. And from that time, from November to April, it took 4 and 5, 6 months or so to get back to where it was. Interesting thing, that kind of turned into a mini bull run. That has first time Bitcoin did a little bull run with where the halving didn't cause it. It's kind of interesting. It might be something you might want to keep your brain on down the road. Could this finally gain momentum and maybe have another little mini bull run that's not caused by the halving cycle? It's something to think about. It's going to be tough, man. It's going to be tough for Bitcoin to go over 40,000. There's a lot of obstacles to come over. Take a look at volume. And this volume's just not going to cut it. Just little tiny green bars. Basically, what this says is no one's really selling, right? It's not that there's some kind of massive buying pressure. It's more like no one's selling. This is July 4th, so it's probably going to be pretty lame till markets fire back up. If I just take one quick look at this volume, the last 2 days is pretty even. I take my little horizontal measure over to the left. It's really the lowest volume since back in like October of 2020. and back to the left, back that way. So this is basically the lowest volume Bitcoin's had in 6, 7. You need to go back 7.5 months to find a section where it's lower. There's a couple spots in here that match up to it, but it's basically kind of even. Like December 4th, it's lower, but not much. It's comparable. You got to go back into the year 2020 to find volume that low. It's just not a healthy place for Bitcoin right now. I've been showing these Wyckoff charts, and let's pull up the 200-day moving average on the weekly chart. I talked about this last video. 16,958. It'll be 17,000 here pretty quick. I'm expecting Bitcoin to come down and touch it. It might take some time. The death wick I was calling for before, for that to happen, there needs to be some buying volume, right? What's going on here is a lot of this coming off this supposed spring. A lot of people left their short positions off a record short attack on Bitcoin, and a lot of people made real good moves here, entering long positions on the spring. See, that's the problem is 1,000 people can watch this video, and 1,000 people might have 1,000 different situations they're in and play it differently. So on a short time frame, this is a wonderful move. The people that entered leverage longs here off this spring. What I'm thinking would happen, but in long term, I'm looking at this. I got my buy box ready to go. I've been talking about buying down here, right? Somewhere down here, however long it takes. So that's me, right? Long term. But there's people in here trading short term, and this is the daily chart. So you can trade a daily chart. So people can zoom in on the hourly chart, like this is like a day, couple days right here. It's like a week right there, an hourly chart, right? So there's a lot of different ways to look at it. The people that made these nice long trades down here off this supposed spring, Wyckoff spring, as you can see, compare the three charts up top. The one on the left is the one I'm paying attention to, the long-term cycle. Anyone that was comparing from May 16th to June 16th, it was saying that was an accumulation phase. It matches the redistribution phase almost to the letter. There was no resemblance to accumulation. So it might be kind of dumb luck that the people were saying it was accumulation, got their spring. So just be real leery. Be real leery of what's going on here. This accumulation phase says it's going to do something like this, right? Be real leery of that. That's going to take a ton of buying pressure. So this market is going to follow the path of least resistance. And right now, no one is selling, right? This isn't some wonderful buying event. This is just no one's selling. So what I'm still thinking is, and even if I'm wrong, this is good information, to just be cautious. I'm expecting it to come up here and bounce off this 200-day moving average. Sometimes my line gets kooky. Don't pay attention to those weird movements at the end. If I can get it to stop drawing. I'm thinking something like this, right? And that's, if you look at that accumulation chart, that matches it perfect. And people are going to be looking for a continuation up into here, like so. But, stupid thing. I pressed the button, it should stop drawing, right? I pressed the button, stop drawing. There we go. That would cause some people to enter the market. So there's lots of people in leverage long positions starting here, right? Some of them probably sold out here. Some of them probably are still waiting. Some of them probably sold out here and are still waiting. Watch out for a lot of them to sell here, and watch out for a short attack that can press this down. Bottom line, this market is just going to follow the path of least resistance. If we bounce off this 200-day and there's a short attack, that amount of buying volume isn't going to be able to stop it. And also, a lot of this buying volume, these green bars down here, is actually leverage longs. So if a lot of those are probably professionals, if a lot of those were to sell their longs and on top of that put in short positions, when we come up here to this 200-day moving average, watch out, man. Watch out, right? It went from 41,000 to 28,000 over 7 days last time. A $13,000 loss from 39 would put us down at, just for reference, would put us at about 23, right about here. Just be real cautious. Be real cautious. I'm still looking for this Wyckoff cycle to play out. It's going to follow the path of least resistance, and I don't think a whole lot of big players are going to want to invest. Looking at that right there, it's just not anything that's super exciting. Pretty sure that the composite man, the big money, I'm pretty sure they're looking to get in down here somewhere. So in my opinion, 20,000 before 40,000. But it's my opinion. I suggest you don't listen to people on YouTube. Educate yourself. And as always, thanks for watching.